Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, June 5th, 2023. Thanks so much for watching. A quick look at our Montgomery County numbers for the last 7 days. We had 148 new listings. We had 141 go under contract. We have 128 closed sales, 19 price changes, and 54 on the private network. Now, I've been talking about how for the last couple of weeks, we've seen less homes going under contract than we have new listings. So we should be making a little bit of headway in that inventory department, but it's such a slight difference that I don't know that we're really going to see much of an impact in our actual market. We're still seeing price, we're still seeing multiple offers and bidding wars on most of the really move-in ready, beautiful homes that are priced well. Those are selling really quickly. So we're not seeing a whole lot of relief in that inventory issue. In fact, we've seen new listings be pretty steady throughout the last 5 weeks. They've been increasing, but not like a ton. So like this week we had 148. Last week we had 142. The week before that we had 169. Now this is just for Montgomery County. I only pull Montgomery County numbers just so that we have like one pocket of data to look at because of course real estate is hyper local. Now we pull from here in Crystal Lake, here in Montgomery County, we pull from the MRED, which is the Midwest Regions MLS Multiple Listing Service. So that's where I get all of my data. I only pull Montgomery County numbers just so that I can look at like one pocket. But we're seeing pretty much the same trends throughout all of Northern Illinois, where we still have extremely low inventory and we're still seeing multiple offers on most properties, I would say. It does seem that we are getting more new listings. And what I am trying to fight people on saying is people say, oh, there's just nothing to buy. That's not really true. There are things to buy. It's just that when nice homes hit the market, they move very quickly. And often there's a lot of buyers. Even with the high interest rates, we still have people who need to buy a home. I know a lot of the homes that I have under contract right now, they're divorced, people getting divorced. There are people getting married, people having babies, people getting job transfers, people wanting to move to be closer to family. All of the reasons why people move, so many people talk about, oh, I can't believe people are still moving with interest rates being so high. It's like, well, the number one reason people move is not interest rates. Like if the interest rate is 2%, I'm not gonna be like, oh, I'm selling my house and moving. I would refinance. Now, I wouldn't move though. That's not a reason I would move. Now, what we're not seeing is a lot of the discretionary movers, like maybe people who their house is good enough, but they're gonna maybe buy the bigger house that they've always wanted. Those people are, if they're locked in at a 2.5% interest rate, yeah, they're probably not gonna move. They're probably gonna stay and maybe wait for interest rates to come down before they make the next home jump. The average length that people are in homes is 7 years. So maybe somebody who's been in their house for 7 years and they're like, boy, I'd really like to move, but they're not going to because they've got a 2.5% interest rate and they don't wanna lose that. So they're not gonna make that home jump. So that we're not seeing. Now, we're seeing closed sales increase each week, so that's a good thing. We had 128 closed sales this week. We had 99 the week before. We had 108 the week before that. We are seeing way less price changes. We only had 19 price changes in the last 7 days. Before that, the weeks in February and March, we were seeing 60 price changes every week. We're just not seeing that anymore. Couple of things to consider. According to FreddieMac.com today, the current 30-year fixed rate is at 6.79%. That is up 0.2% from last week. So we are seeing the interest rates rise as we're having some of those inflation reports come in. We're showing that inflation is coming down, however, not as fast as the federal government would like. And we had a jobs report that came out last week that was more favorable than we would have expected because in a recession, one of the main indicators is that we have a higher unemployment rate. And since we have more job creations, they're thinking that they're not fighting inflation enough. So we'll see the Feds meet next week, and that should be interesting. They're likely to raise the interest rates again, which is going to hurt. We did have the debt ceiling issue crisis abated. That issue has been resolved, so we should see some favorable outcomes from that. We are seeing rental listings have jumped last week. So I think what we're seeing there is that a lot of people who were searching for homes, maybe they kind of gave up on buying because affordability has become such an issue. We have prices that are way up this week as the average sales price exceeds last year's average sales price of, last year's was $405,000 in this area. It is $410,000 according to the MRED MLS. $410,000 is our average sales price in Northern Illinois. That's high. So affordability has become a big issue for a lot of buyers. And so that's why we're seeing some of those rental numbers going up where people just go, okay, I can't buy yet. I gotta rent a little bit longer. I'm going to rent instead of buy. So that is a decision that some people are making. So we're seeing rental prices go up. Now, on that sort of on the flip side, I have a lot of investors right now who are buying homes because they know that the housing market is a stable place to put your money. You are going to get a great rental income. You're going to have someone else paying down the mortgage. You have a fixed asset at a fixed price that is going to a value that will appreciate, and you could have someone else paying down that mortgage. So if you are somebody out there who is maybe not ready to move personally, but you would like to have an investment option, I would highly, highly suggest that you give me a call and we talk about what becoming an investor looks like. I walk a lot of people through that every year. I walk them through how to get a good tenant so that you're not dealing with evictions and all kinds of tenant issues. My husband, many of you know, owns 35 rental properties, and he does not have any eviction issues. We've never had any of those problems. We usually have pretty good tenants, and over COVID, we had 0 of them take advantage of the eviction moratorium. They all paid their rent. So we have a really good track record of getting great tenants. So if you're interested in becoming an investor, please reach out to me and I can tell you how we do that. A couple other things to keep in mind. USA Today had an article published this morning titled "The Fed's Inflation Fighting Tactic Was Effective in Cooling the Housing Market. Now What?" Some things to keep in mind for that. The number of homes being sold is almost 1 million less than last year and 2 million less than in 2021. However, home prices are still climbing. Now, why is that? Because both factors are because of inventory. We have a lack of inventory. So obviously we're selling less homes because there's just not as many to sell. And we have prices going up because when a house does hit the market, there's more buyers than we have sellers. And so therefore they're driving those prices up. We would expect increasing mortgage rates to bring sales prices down, but because supply is so tight, that is unlikely to happen. We're seeing prices continue to go up. I had somebody say today, "Oh, I'm afraid of buying high because I don't want to have the market crash. I'm afraid that we're going to see 2008 all over again." And we've been over this a million times. This market is so completely different than 2008. We had oversupply of houses. We have a low supply now. So in 2008, we had 13-month supply. Right now we have like 1 month supply. We had a very unstable mortgage market in 2008. We have a very stable mortgage market now. So it's just totally different. You can't even compare them. So one thing that this article did say is that we have a lot of uncertainty in the coming months as we see what the rates are going to do. And so we should expect a less seasonable year. So whereas normally we would see most of our sales and closings happening in April, May, June, July, we might see a year that's a little more backlogged as interest rates come down through the end of the year. We're hoping, this is something we can't predict, but hopefully interest rates will come down through the fall and winter, and we will have a really active fall and beginning of winter months. So our seasonality might be a little more heavy after September if interest rates come down. Now, one thing that could shut that whole thing down is if mortgage rates hit 8 or 9%. If that happens, then who knows what's going to happen. Now, that is very unlikely, but it is not out of the realm of possibilities. Now, if that does happen, well, you've got to keep in mind that there are people who will still have to move. So that's something that I tell people. If you're thinking about selling your house, you want to get out of the state, you want to downsize, you want to do whatever it is that's motivating you to move, you've got to think there's always going to be people who need to buy a home. There's always going to be people that are relocating. One of the things that will never change is that Chicago has one of the largest job markets in the country. That's not going to change. There's always going to be people who need to move here for work. We also continually will have people dying. I know it's morbid, but that's going to continue to happen. We will also continue to have people get married and have babies. So all of those things that influence people moving, those things will continue to happen one way or another. So if you are interested in getting a home or buying a home, you've got to think about the fact that there will always be people buying and selling real estate. That is a reliable thing. Now, another factor that this article talked about was new homes. Builders. We have builder confidence is up. However, the bank instability is a problem for builders, and lending conditions for builders have tightened. So the interest rate for development and new construction is now well above 10%. So that is something that is influencing builders to hold off, and hopefully we have some interest rates come down. We'll see what the next couple weeks bring. So that's where we're at right now. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. Hope you have a great rest of your Monday. Bye-bye.